Hey everybody, Jeff and Travis, Landmark Real Estate Group. There's been a lot in the national media about the real estate market and pricing going down. We're going to cover all that and more today in this update on the real estate market. So Travis, it's been quite interesting to watch the market here locally over the last couple months.
Yeah.
There's been a substantial reduction in prices that have been closing.
Yeah, what were you saying? The market's crashing, we're all gonna die.
We're all gonna die. We should do like the icon on the screen with the plane just going straight towards the ground.
Well, that's the doom and gloom kind of forecast that so much of what the news wants you to believe. So we want to talk about what the data actually shows in San Luis Obispo County specifically.
Yeah,
so
I think it's good. I think it's super helpful to break off our little area, talk about it objectively so that people have a good feel of what's going on. It's something that now that we have the May numbers and we can look at it, we're like, oh yeah, it's interesting to see that there is some downward pressure on pricing.
Yes.
But days on market is still relatively short for our county.
Yeah, let's talk about it. I mean, we're in June at the time we're recording this, so we're looking at, we have data through May. So one of the interesting things, which we can start off with pricing, was we saw about a 9.5% reduction in sales price, an average sales price. So, that's a substantial decrease, and initially could make you think, oh gosh, is the market crashing, or what are happening to home prices? But when you look at the rest of the data, I think it's helpful to illuminate that. So,
and it's also interesting because we have our kind of experiences that we have happen in real estate that sometimes don't necessarily reflect what we're seeing in the numbers.
Yeah.
But at the same time, the numbers don't lie. So it's interesting to look at what's happening as well.
Yeah.
I think there is some properties that are stagnant right now that are having a hard time selling, which is interesting. We haven't really seen that in the past, but there are houses that are listed that are taking a little bit longer to sell. And then there's houses that are flying off the shelf.
Yeah.
And they're kind of balancing the two out. So the days on the market, we're not seeing a huge increase in that graph.
No,
but
days on market is still, it's 15 days on market and it's been consistent over the last couple of months, 13 to 15 days. Now that's quick.
It's quick.
So that'll kind of show you buyer demand, what they're looking for. And in fact, we were talking about this earlier, the last 3 or 4 deals that I've gotten into escrow-wise on the buyer side over the last couple of months have been multiple offer scenarios. Like we're talking at least 2 up to 8 offers that we've won. Are they all kind of
stereotypical like 3-bedroom, 2-bath house type of thing?
No, I mean we're looking at like a $900,000 dollar home in AG with like a junior ADU all the way up to like a $1.4 million home in Napomo, like kind of everything in between. So that was an interesting one to me. So I mean there's still a lot of demand. At least anecdotally.
Yeah, and I think people are still really attracted to like having an ADU or extra unit like on the property. We're seeing a lot of like demand around those as I've really noticed in the higher
that
points.
One on the 8 offers was on property, and you could, it had a single family home, but you could build. It was on like an acre. So there's a lot of demand for that. I mean, it feels like all the buyers are at least in that kind of 800 to $1 million range, because that's sort of like entry level homes at this point in SLO County.
Let's click on the percent of list price to close.
Yeah.
And this is so interesting to me.
Tell them what this measures.
So basically it's what you originally list the house for, and then what the house actually closes for. And we're in this area, and it's in SLO, we hover right around 100%. Sometimes it dips a little bit. Sometimes you'll see like a more substantial dip, which we saw kind of the beginning of 2025. We saw quite a good dip. But right now it's at 98.4.
Yeah.
Which is healthy. It's like there's not...
It means sellers are getting about, on average, 98% of what they ask for. So it's interesting because when you look at the 9.5% reduction in sales price over the last couple of months, but then you look at this, it's like,
what's going on?
Because the average sales price is coming down, but sellers are getting what they're listing their home for, which I think might mean that the homes that are being listed and sold are just lower price point on average.
For sure. That's exactly what that means. I mean, I think
there's not a lot of data again. So like it can be a little bit volatile because inventory is still so low that there's not a ton of data to pull from, but you agree?
I totally agree.
Okay.
Yeah. So that's interesting to see.
Yeah.
Also, just so people know, those numbers, when we're looking at this, we usually go median. And so we're looking at the median because otherwise with the average, your numbers can get really skewed based off like one that like really doesn't sell for the price that people were trying to get or something like that, or one that goes way over.
Yeah, so we know like the average sales price has gone down. We look at like the median percent of original to sales price is right at 100. We know days on market is still low.
Yeah.
So let's talk a little bit about inventory, So we looked at let's talk about
buyer's market
versus seller's market. How do we measure that in month supply? What does that mean?
Yeah, so we look at month supply. So that means like if nothing else was to go on the market, how many months of supply would we have until there was no more remaining inventory? And a 7-month month supply would be a kind of a neutral market. So we're at 4.1. So 4.1, and that's it's still a seller market, but it's becoming more and more of a neutral market.
Yeah, well, and just to give some context, back in 2022 when things were going crazy, it was 1.1. So
that's nuts, right?
Nuts. And so it's been kind of up and down, but slowly increasing. And over the last couple of months, like in January and in December and January of 2025, it was at 2.9%.
And now
2.9 month supply, and now we're at 4.1.
So I mean, you're definitely seeing a more neutral market, although it's not quite.
It's still a seller's market.
Yeah.
But inventory
compared to what we're used to.
Yeah, compared to what we're used to.
Yeah.
So I still think this is good news for buyers because there's more inventory to choose from. There's more options, and with a 98%, list price to sales price ratio, sellers are still getting their price. So it's good for both parties, but we're definitely seeing more. And look at the active listings growing from, this is SLO County.
623 to
in December of 24 to 844.
I mean, that's quite a large increase.
Yeah, it's good to see. I mean, we needed the inventory. And, the one thing that everyone asks, like, well, what would create a crash in sales price or a correction even, and we're seeing a slight one, but more inventory.
A lot more inventory.
We need a lot more inventory, more than the seasonal spike we're seeing here, and we're just not going to get that. So
yeah, I think things that would drive that would be like something like the SLO closing, or something like that. That would be what drive
something major.
Major.
Okay, so what do you take away from
what does this mean for you? Yeah, which is the most important part, like what it means for buyer or seller. Well, I think let's start with the buyer.
Okay.
I think for a buyer, there is a little bit more out there to select from, a little bit more room to maybe negotiate a little bit. Get something in contract and then do a little bit steeper request for repairs.
It'll depend on the property type and the price point that you're in and all that kind of thing.
Yeah, and I think if that house has been listed for a long time, you're going to have more opportunity, more leverage to negotiate.
Yeah.
I think it comes to the product, that certain product still is really desirable, really flying off the shelf, so to speak. Where other products are a little bit slower to move, it will move, it's just taking a little bit more time.
Yeah, so buyers, you have more options basically.
Yeah.
But still competitive, but maybe some room for negotiation just depending on the product. Maybe not. You could be in a situation where there's 6 to 8 offers and you got to get aggressive.
I think for the listing side or selling side, you really have to be ready to sell by doing your inspections ahead of time, having the house looking good, staging it, really setting it apart from the other inventory that's out there, professional photography like we always do, staging, repairs done, landscape looking good.
Yeah, this is our top dollar program for sellers. Really will set you apart because with more active inventory, there's more competition for sellers. And so you do have to make sure that you go to market ready because that first 2 weeks is crucial. It will never be better for you as a seller. So you have to come out of the gate strong. After 2 weeks, you're past the average or median days on market, and then people start wondering
what's wrong with that property.
Exactly. And then price reductions and all that kind of stuff. So you don't want to be there. So
I think that's all really important information for you. That kind of wraps it up, I guess, Travis.
Yeah, I think it's good.
Hey, thanks for tuning in to Jeff and Travis on the Landmark Real Estate Channel. We'll talk to you all real soon. Take care.